Good morning, everybody, and welcome to the Siler Wealth Management video blog. Today, Thursday, special edition, January 28th. I wanted to come on today, and I did do a report yesterday, but I wanted to discuss a couple of things that are good in the market. I know a lot of things are doom and gloom, and there's one guy out there, Mark Faber, with the doom, gloom, and boom report. Not all things are bad. In fact, the repricing of assets in the stock market has been overdone. It really has. Doesn't mean we're not going to have the other whoosh down like I talked about yesterday. We were down over 200 points yesterday. But I wanted to go over just a couple of items that, as far as earnings are concerned, where this market is mispricing things. And now the first one, the market hasn't mispriced that badly, and that's Facebook. And Facebook had a $110 high, got down to $90, $92 a week ago. But after the close yesterday, Facebook ticker symbol F as in Frank, B as in boy, trades on the New York Stock Exchange. This has been an unbelievable company and an unbelievable stock. And I just want to disclose, we do own the stock for some clients. We own the stock in many cases for employees. But this stock came out, the company came out with earnings yesterday that absolutely crushed earnings. Okay, what they have been doing to monetize the mobile user, that was the whole problem early on in Facebook. And that's what happened after the IPO came out, the stock tanked. They couldn't figure out how to monetize mobile because most people use this app on their mobile devices. Not as many people use it by logging onto a computer anymore. So, that being said, the company beat on the top line, sales growth, and crushed on the bottom line. What's more is, here's what's interesting. They have almost, over 900 million, but I think 934 million to be exact, daily users and over 1 billion monthly users, but it's crazy. 934 million daily users. Their ad revenue for the quarter per daily user was $3.73. That's the average. Okay, so they are monetizing, even though you think that you're not spending any money, you're not clicking on any ads, you're not doing anything. Guess what? You're generating, by watching me right now, $3.73 in daily sales on the average daily user. That's what you generated for the quarter. Okay. That's absolutely phenomenal. That being said, stock closed at 94 and change yesterday. It is trading right now at 108, so it's up $14 pre-market. So that's just phenomenal news for that segment of the market. Okay, something else that came out: Ford came out with record earnings. Ford ticker symbol F on the New York Stock Exchange. Another stock that the market has not found the value yet. Ford's trading around $12 a share, but they came out with record earnings, and truck sales are going gangbusters. That's what happens when gas goes below $2 a gallon. And interesting note here on Ford, it's trading, the stock, now we're talking record sales, it's trading at the same price it did December of 2012. Over 3 years ago, stock's trading the same price with record earnings. So the repricing of assets is a real thing. Now, I want to talk about a stock, and I do not own Ford for clients, okay? I want to talk about another stock real quick. And these are not recommendations by any means. Please consult your financial advisor. If you need a good one, I can direct you to that person, okay? Just contact me. Secondly, let's go over another stock I really like. We've made money on it in the past, and I'm really considering getting back in, and it's Under Armour, ticker symbol UA, trades on New York Stock Exchange. This is a stock that had a $106 high last year. As of recently, got down to $63. They came out with their earnings this morning, just absolutely crushed earnings and revenue. This thing has just been unbelievable, okay? Closed yesterday, Under Armour closes at $68.58, trading at $78 pre-market, up $10. Needless to say, the markets in general, all three major averages, the Dow, the S&P, and the NASDAQ rebounding. Not getting back what it took yesterday yet. Again, I still don't think there's enough fear yet. There's a lot of fear last week. I saw a lot going on, but still not fearful enough. That one more whoosh will likely test and retest those lows that we saw. But earnings aren't so bad. There are a few misses out there as well, and you're going to have those. But right now, we're probably tracking around 70% of the S&P 500 that have reported earnings are exceeding expectations. So that's on par. On a bad month, it's about 67, 68%. So a bad quarter, excuse me. All right, anyway, thanks for joining me. I'm Lee Seiler, Seiler Wealth Management. This is my video blog. Share these. We just moved our new dig, so I'm looking for my green bowl with all the names in it, and I'm going to redo that, but I promise I'll give away several cruises next week, and I will be doing this. But please, share my video, all right? You can also like my video. We're going to add and put more names into the bowl. But this information is for just your research purposes, all right? These are not recommendations to you. It's just information that you need to know, because everybody out there is saying how bad things are. And you know what? Things aren't great, but there are some segments of this market that are looking pretty good. I just named 3 of them, okay? Thanks for joining me, and I'll talk to you soon.